Hi, this is Joe. I'm just going to do a quick intro. We're going to talk about the S&P, and then I'm going to go into a specific stock setup, go into the reasons why, and then also how we take targets. Let's go straight into the charts. We already have the S&P chart up, and one of the main things I really wanted to talk about was the fact that I've got all 4 time frames up, and there's a reason why I do this. For anyone who hasn't been watching any of my videos, you have 4 time frames that are giving you an idea of what's taking place in each. So if I've got a 18 and a 40 in each time frame, I can see, and I've got an 18 MA on an 18 month and a 40 month on the monthly chart. I've got an 18 week and a 40 week on the weekly chart. I've got an 18 day and a 40 day on the daily chart, and then I've got an 18 hour and a 40 hour on the hourly chart. So if I look at all these different time frames, and if you think about it, if the 18 is above the 40 and both lines are rising, then you have a trend in that time frame. If you have, and that's what I would constitute is what's taking place on the monthly chart. The 18 is above the 40 and both lines are rising. If I look at the weekly, the 18 is below the 40. The 40 is more flat than down, but the 18 is clearly down. If I go to a daily chart, the 18 is above the 40 and both lines are rising right now, although 18 on the daily is starting to lose a little bit of slope. And then if I go to the hourly chart, the 18 is below the 40 and 40 is certainly declining. 18 is starting to flatten out. So the reason why I'm bringing this up, I think it's very easy to see when you look at it with all time frames in place. We're constantly looking for a setup in one time frame and then one time frame down. We don't mind it being counter trend to the next time frame, but you have to have a setup in one of the time frames. And if I look at a monthly chart, I don't really see a setup. I see, the moving averages are rising, but you had a really deep decline and then a big rally up. You don't really have any kind of respect to the moving averages. And then if I go to a weekly chart, I have a big decline and then a big rally. And again, no respect for the moving averages. You just basically went right through them. But in the opposite, basically to the upside. So you went tearing through them to the downside and then tearing through them to the upside. If I go to the daily, I'm starting to get a little bit of respect. Once we moved up into this range where the 18 crossed above, you came in the zone, came out of the zone, and you moved higher. Now we're coming back into the zone. The question is, does it hold here? And then we had some respect on the hourly, although it was mostly for the 40, not really the 18. But again, both lines were rising. Well, at least the 18 was above the 40 for this whole period. So I guess the point I'm trying to make is that I'm looking for a high probability zone where you can put a setup on and expect some follow through, something that has some meaning to the move. Right now, it just looks like, a lot of different movements in different directions in each different time frame. If the monthly came down and failed at 3,000, and the weekly failed right there at 3,000, we would have had a really good setup to the short side, which is what we were looking for. Now, though, I kind of have to look at this and say, yeah, we could drop from this point, but there's probably underlying support, 2,800, 2,700, something like that. It doesn't really, based on what's taking place on the monthly chart, I just don't see some big calamity taking place. I don't see a big type of violent move to the downside. One thing I want to talk about, I'm going to zero in on, is the hourly chart. And I want to make sure you understand, I am still looking for this move above a pivot low taking place above 25 and above the green DI. I think if we got that, and it's almost going to have to take place basically from the start of the day tomorrow. If we get any more strength to the upside, there's a very good chance that red DI is going to duck down again and green DI is going to cross back over. And we're going to have the same situation that we've been looking at on every single drop that's taken place. Every time we've tried to sell off, we haven't been able to create this pattern where red DI holds 25 through a pivot. Because I'm looking for a move where it comes into like 25 to 30. Right now it's at 29 and then holds and then turns up. So we're set up to do it, but we're going to need to get it going right away off the open tomorrow. Because again, if we have any more strength, you're probably looking at another situation where this turns into kind of a range Maybe we go and fill this gap a little bit. Maybe it has more strength than that, but I think based on the selling we saw last week, as I described in the last video, I think there's some trouble overhead up at 3,200. I have a hard time seeing it just turning on a dime. I mean, the Fed's out there really trying to keep this market going. So you have to keep that into account, take that into account. But at the same time, with the violent selling, I think the higher probability is a range. If we don't get going to the downside right away tomorrow, then I would be looking for some kind of a range to form with resistance at 3,200. Let's go to, I'm going to pull up a chart of VIV very quickly. I just want to talk about, let me switch to the 4 time frames. So monthly chart, this was a monthly weekly trade we did. And we're actually still in it, but we're looking at this run here to the upside, and then we get a pullback and a correction. And this last decline, this part where I have the arrow pointing, is where the market crashed. Essentially, where we had the bear market over in the overall general market, and that caused this to dip down. But if you notice what took place in the stock, you still had a rising 18 on the monthly chart and a rising monthly. Still in a very strong trend, but notice even more importantly, look at how the ADX was still up almost at 50. So ever since 2016, the middle of 2016, the ADX has essentially been, let's say early 2017, you've been above 25 for sure. And then on every correction back to the 18 or in the area of the 18 on the monthly, the ADX has held well above 25. So until we see any kind of a change like that, you're going to want to continue to buy pullbacks in this trend near the 18 as long as ADX stays well above 25. That's a power trend. That's a very strong trend. If we go to the weekly and zero in a little bit, during this period where the market really sold off, the ADX stayed low. So I just want to go back and show you this in both time frames. So the monthly chart is showing very, very strong ADX. That's the higher time frame. And then the weekly chart on the lower time frame is showing weak ADX. It's a low ADX pattern. So that's the combination I want to see. Strong ADX on the higher time frame, and then during the corrective phase, the sell-off phase, I want to see low ADX because that shows me that the sellers are not very strong. And in this case, I'm going to go to a daily chart and just give you a little bit more detail. So this pattern was actually a undercut and rally. So if I zoom out a little bit, you undercut the 140 area, moved up, made a higher low right in this zone. You're making that undercut and rally, which is a part of, again, if you look at the bigger picture, you had the monthly in place, the weekly in place, and then you get this pattern. I like combining different setups and getting, it really increases your odds. So our entry was right around 160. We risked down to this horizontal line because this is a very volatile name. We gave it a little bit of room. It was probably somewhere around 18 to 20 points. And then at 18 to 20 points of profit, we took a quarter. So once we got 1-to-1, once we got what we risked in the trade, we took a quarter off. And then we raised the stop to break even. And then once we got 2-to-1, we took another quarter off, and then we raised the stop to the 1-to-1 price level. So just to put that in here, so our stop level would have gone to here, and then once we got to 3-to-1, we took another quarter off, and then we raised the stop to 2-to-1. So if we get to 4-to-1, we're going to raise the stop to 3-to-1. And then we're going to keep doing that until we get stopped out. So this is a different way of taking profits, but I can tell you it's a way of making your equity line be a little bit more consistent. Instead of waiting for a big profit of 3-to-1, this is a way to sort of take partial profits, but still allow yourself the ability to make bigger money if the stock continues to go in. We like to do that in situations where we've got the potential based on the longer term pattern, based on the weekly and the monthly, that there's a lot more upside. So I'd be more inclined to do that type of this type of profit taking strategy when you have a very strong trend in place. And you could do it different ways. I mean, you could take profits at 1-to-1 and 3-to-1. You don't have to take it at every single one, but I would continue to move the stop up as the stock moves in your favor. And then on a swing trade, a short-term trade, just make sure you're sort of taking, I think, be more aggressive at taking profits in those situations. So I hope this was helpful. Please subscribe, and we'll talk to you soon.